Mohamed Al-Erian, accomplished guy, president of Queen's College in London. He's an advisor to Allianz. He's probably one of the most legit guys on TV, one of the few that actually knows what they're talking about. Usually, however, Al-Erian doesn't tend to give out a lot of information. He's there to kind of promote his brand, but he's very careful with actually giving advice. He's very general. He's very amorphic. This time, he said something very uncharacteristic, very atypical, saying, hey, get out of these irrational markets. Shit are about to hit the fan. Now, he was talking about sovereign bonds, not equities, but he said that he's not optimistic about the market and it's not a good time to be in it. Now, again, if Mohamed Al-Erian is saying this and he's not the sort of guy to actually tell you to do one thing or the other, you can pretty much understand how pessimistic he is about the market to be that certain. Now, again, I don't know exactly what's going to happen. I don't have a crystal ball. Neither does Mohamed Al-Erian.
Articles from MSNBC and Markets Insider, S&P 500, has slumped 7% since its midsummer, in a sign markets are starting to realize inflation isn't cyclical, and investors won't be able to pressure the Feds into a making dovish pivot. Economist Mohamed Al-Erian said, I don't think there's any doubt that the markets has held the Feds hostage for a long time. Al-Erian said in an interview with CNBC on Friday. He also said that consistency has all come down to HFL, higher for longer, referring to Powell's statement on rate hikes. At Jackson Hole,
moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. At our most recent meeting in July, the FOMC raised the target range for the federal funds rate to 2.25% to 2.5%, which is in the summary of economic projections range of estimates of where the federal funds rate is projected to settle in the longer run. In current circumstances, with inflation running far above 2% and the labor market extremely tight, estimates of longer run neutral are not a place to pause or stop.
the more Fed officials repeat it, the more the markets are pricing it in. Al-Erian stands strong and has been a loud critic of the Fed's delayed response to inflation. Other markets are hoping somehow that we are in a cyclical moment, not in what I think is more secular and static. Al-Erian gave the Feds credit for establishing a clear and consistent message, but said it would need to do more. Two more things in order to give its forward guidance credibility from here on out. One is to explain to the marketplace why it got its analysis so wrong, what it has done about its forecasting abilities, and secondly, change its framework. Remember, we still have a framework that is for a world of deficient aggregate demand, and we are in the world of deficient aggregate supply. Then finally added that the current framework has been geared toward an environment in which inflation has been too low for too long, and they expected it to stay there forever. It's time central banks get a new framework. Just his suggestion. Let's see him in action and his interviews. Editor, roll clip, fair use.
What is your timeline where all of America finally gets inflation back into the bottle?
So it's going to take some time because the Fed has been asleep at the wheel, and that's unfortunate. Tom, what you raise is much bigger. It speaks to the Fed being necessary but not sufficient to address our policy issues. You've got to deal with the inequality aspect. You've got to protect the most vulnerable segments of the population with focused fiscal policy, and you've got to do a lot more on productivity and equal opportunity. So it's a long list, but the Fed has to focus on inflation and has to do it in a more committed fashion than it's done it so far. I think the most important thing that has happened, Steve, is the consistency of messaging, which we haven't seen for a while. And that consistency has all come down to HFL, higher for longer. And the more Fed officials repeat it, the more the market is pricing it in. But it's mainly the fixed income market so far that has priced it in. Other markets are still hoping somehow that we are in a cyclical moment, not in what I think is much more secular and strategic.
There's a big lesson here. And again, I asked the question before Jackson Hole, and I think we got the answer. What on earth was the market expecting from Jay Powell? And it was very clear what they wanted. They wanted the pivot. They wanted interest rates to peak in early to mid-23 and then start coming off again as well. Why? There's a lesson here for all our viewers. Why did the market get it so badly wrong when even commentators like myself, humble commentators like myself, and experts like yourself never saw a pivot coming?
I think three reasons. One is the mindset. the market has seen the Fed blink before.
Okay.
Fourth quarter of 2018 was an example, but there's been lots of examples of this Fed blinking. Second reason, the message wasn't consistent. It was yes, but. We're going to tighten, but. And then the third is just self-reinforcement. That's what we want to hear. And we, the behavioral scientists will tell you, we tend to frame things the way we want to hear it. So the minute you hear the but, you focus only on the but.
What the Fed is likely to do, what it might mean for stocks, and what do you want to share with our viewers on what your current view is?
Thanks, Scott. Look, I really liked what Josh and others were saying about what the Fed should do. The data, the commentary all points to higher for longer. So I don't have any issue with that. It really is what the Fed will do, and this Fed in particular. What will it do? Remember, the chair's comments have always been hawkish until he gets to the Q&A. He didn't have a Q&A this time around. Remember, the global economy is weakening much faster than most people expected. So the only question I would have is not what the Fed should do, but what will the Fed end up by doing? Because if it flip-flops, that's actually worse for stocks than if it's permitted and gets the inflation genie back into the bottle. So I think the uncertainty around the Fed is actually much higher than what's suggested by the discussion.
So you are more of a don't believe the Fed rather than don't fight the Fed at this point?
I am wait to see whether the Fed follows up. If he was serious at Jackson Hole, he would have extended his 8-minute speech, which is an unusually short speech, to do two other things. One, explain why to us they've made all these policy errors and how are they better at forecasting inflation. And second, point to a pathway for changing their framework. They still have a framework that is pro-inflationary. And until they change that framework, I think there's going to be a lot of people asking questions about their seriousness.
So it's been trying to sound, Mohammed, committed, right? I mean, they've basically been saying inflation is their number one issue that they're facing. Why is the market not hearing it?
Two reasons, Lisa. One is the Fed itself. Let's not forget that Chair Powell stated that we were at the neutral rate. The minute the market heard that, it moved, and it moved in a significant fashion, and all the talk about pivot started being amplified. So that's one reason that the communication hasn't been consistent, and that's been a problem for the last year. And the second issue is that the market is looking at the impact on growth, is looking at the potential impact on markets, and as John said earlier today, remembers the fourth quarter of 2018, remembers the Fed blinking, so it believes when push comes to shove, the Fed is going to blink again, that we're going to have a flip-flopping Fed.
Hey guys, it's Jose, your regular Joe Blow again, keeping an eye out and my ears open to moves outside the Feds, and Mr. El-Arian speaks truth. I agree with him. It's time the Feds work out a new system and stay honest. This can't be sustainable. Do your research and I'll keep bringing you my best. And stay tuned for upcoming FOMC meetings. And I think 75% basis point rate hike this month. That's my guess. But let's see. Thank you guys as always for your support. Truly, 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 I'm blessed with you guys. Thank you so much. And don't forget, stay free.
It ain't hard to tell. I excel, then prevail.